All right. Good evening, everybody. This is the second Side Hustle Investing nightly review. And let's go ahead and jump into it tonight. I'll make it quick, but I do have a lot to cover. So, as we go into our portfolio page, as always in Tastyworks, you'll see that slowly but surely that theta decay is working, and you can see that our net liquidation value has gone up yet again. It's still going up quite slowly, but I think that with the trades that I put on today, which I'll add to the beta weighted portfolio over here, you'll start to see that net liquidation go up or down at a much more rapid pace. So what I show here in the beta weighted portfolio view, my overall risk target relative to the S&P is, it looks like one big iron condor. It was very flat and very broad, and that's all well and good, but I want to, over time, me being the statistics geek, I want to see if I can do the best I can to mimic the actual normal distribution curve. So I needed to bring the peak up just a little bit. And there's one very good way at bringing the peaks up in your overall curve, and that is by selling at the money calls and puts. And what that does is it creates that mountain, and it creates a mountain right there in the center of the portfolio. So I might have gone a little overboard today, but I certainly did achieve that. And so I'll go ahead and skip to the chase, and let's put on all the positions so you can see the total impact. And so now, like I said, I might have gone a little overboard, but I certainly do have much more of a peak there. And I did that by opening up not one, not two, but three iron flies. So got myself the hat trick. And let's go ahead and go through it. So what I've started to do, and I'll test this out to see if this is kind of the process I want to pursue going forward, is I put in my journal entries for each trade. And I think that if I go into this, I can show you the similar order so you can see kind of the details of how I went about it. So let's go ahead and just give you the brief overview here. I was getting into the currency game with this first trade of the day. Made it at 2 o'clock in the afternoon, so I definitely was not. I'm sorry, I entered the journal entry at 2:14 in the afternoon. The trade was actually entered at 12:52 in the afternoon. So I placed a $5 wide iron fly at the short strikes right over the money at 104 here. So you can see my strikes there. And the reason why I did this was volatility was at the 42nd percentile. It's not incredibly high, but given that if we look, I think if I go ahead and click into FXE and I can bring up the chart, it's not all that volatile if you compare it to, an individual stock. I mean, this is a basket of currencies compared against the US dollar. So, or I'm sorry, it's not a basket. It is the one currency compared to the dollar. So it's not going to have the same volatility as an individual stock. So I thought that'd be a good opportunity to start selling my iron flies. And also, research does show that you're going to do more damage to yourself simply by staying on the sideline, even if the conditions aren't perfect. Now, to me, I would consider the perfect opportunity to sell an iron fly or a straddle, which is the undefined risk counterpart, when implied volatility is above 70% or so. But being almost at half point, I thought it was good enough, and so I placed that trade. The risk was only about 250 or so on the trade, and I'm going to keep that for most of my positions. I don't want to risk more than that at any one position yet. And even my undefined risk trade, it risked 500. That was at the push point where I was considering not going after it. So if we click into the similar order, you can see I'm doing the standard 45 days out in expiration time. Let's zoom in a little bit, and placing it the short strikes right there at the current stock price where it was at, and then I went $5 out on either side, which takes me outside the one standard deviation range. So I felt this was a good place to start and kind of to watch. Now, if you look at the credit I took in was about 250, which is, much higher than what you would get from an iron condor, but I'm not expecting to receive that full credit or even half of the credit. I'm looking at closing this one out at a 25% of maximum profit, which I could do math, but I'm just going to go ahead and check out my closing order. I have a closing order in. Oh, I only opened that one. Shoot. Well, I have my closing order in. You can see it from the portfolio page here. If I go to FXE and I click on my working orders, you can see here that my total credit received, or the trade price, was 246, and I'm intending on buying it back at 185, which should be a credit of, I know it's here somewhere, $61 profit. So right in line with kind of where you're at with some of the other trades we're making, but this one does afford some opportunities. What I like about the Iron Fly is, let's go ahead and go back into this trade. No, let me. And thank you for your patience, guys. I'm still kind of getting my bearings about how to do this all the most efficient way. So what I like about this is that high theta return on capital at 0.69%. It's extremely, extremely high. And what that means to me is that you're going to be making a fair amount of money day over day just due to that time value of money and the decay of time during an options contract. So I really do want to focus on that because that's where you make that consistent day over day profit. I also like the Iron Fly because of this, just about a 1-to-1 risk to reward ratio. When you look to close that early, I mean, we'll see. I mean, this is my first one, so I'm not going to jump to any conclusions here. I know the probability of profit is lower than what you'd see from some of the other trades, but I'm not looking to achieve that 50% profit. As you can see here, that's probably not a good idea. 33% of achieving 50% profitability. So by closing it at 25% profitability, we're looking at being in a better position. So the next trade was in the retail sector of the S&P 500. I placed yet again another $5 wide iron condor in this one. So again, let's go ahead and click into this. So I went in for $2.25 profit. Again, right about that 50% probability of profitability, and a 0.66 return on capital, theta return on capital. Max loss right around that 250 is 275 here. So it wasn't a perfect 1-to-1 in this case, but very, very close. Again, you're keeping a very high theta value in this. So we're looking to see a good amount of time decay in this one here. And that has to do with that $5 width between the short and the long strikes. Obviously, if I did not have the long strikes at all, there would be nothing but theta going on here. So if I were to place a similar order and close out these, get out of here. Oh, here we go. Delete leg. Delete leg. And looking at this, my theta return on capital is lower, and that's simply because the risk is much higher. I won't be able to see it here with the market not being open, but the risk is going to be in the order of 5 to 6 times the amount of risk put up immediately. But that theta value is higher at 2.79. The other one was around 1.5 or so. And then the last earnings, or the last iron fly that I placed for the day, this was kind of my gamble, I guess you could say. I did follow this one off the follow page from Ryan he's on the Ryan and Beef Show. He did a $7 wide, I believe, iron condor in Facebook as an earnings play, and I wanted to take less risk than that, so I did take again just a $5 wide if I can do math correctly. So let's take a look at this one here. What I love about this, you click down here on this little tab here, and it'll quickly show you the dollar distance between your different strikes. So if you want to try to make it a very quick and easy way to equidistance your strikes, that's a good way to do it. So I placed this one $5 wide. It is right around the expected move for Facebook for the earnings play. My max loss here is only $83. Is that right? Am I only risking? Yeah, I'm only risking $83 with the potential of making $417. So I'll go ahead and take it. This is not for the weekly earnings expiration. This is for the actual regular expiration monthly at now 16 trading days left. Or I'm sorry, 16 calendar days left. So just a quick video tonight. As I said, the Iron Fly, what I like about it is that it's one of those that is very powerful if you see your overall portfolio curve being a little bit too oops. Oh no. Oh no. Reopen. If you see your portfolio curve becoming too flat, that's a nice way to create that peak in there. Again, I placed 3 today. I don't intend on holding all 3 for a long time. Facebook's going to come off tomorrow based on what happens with earnings. But the other 2 will help. So if I go ahead and take Facebook off, you can see now we're much more at my desired probability distribution there. So that's it for me tonight, guys. Hope you guys had a good day trading as well, and I will catch you tomorrow on the Side Hustle Investing nightly video review. See you guys.